Bitcoin is in one of those moments again. The price drops, the headlines scream, and everyone suddenly becomes an expert in panic. But before you jump to conclusions, remember this clearly. Bitcoin is not a hedge against inflation, at least not yet. Not in the way textbooks describe hedging. Bitcoin is still viewed as a risk asset in global markets. It moves fast, reacts sharply, and often feels more like a lightning storm than a shelter. And that's not a flaw. It's a reflection of what it truly is, a new financial tool with no central authority. Bitcoin was designed to be a system that cannot lie, and that's why it behaves differently from everything else. Its price is driven by all of us, individuals, traders, institutions, miners, companies, countries, and the ever-changing waves of fear, optimism, and narratives that shift by the hour. Driven by everyday people. People learning, experimenting, hoping, building, doubting, and trying to understand a new kind of money. This diversity means its price reflects something deeper than inflation numbers or interest rates. It is a pure reflection of global human behavior. So let's make this simple. When inflation rises, gold often climbs. When inflation falls, bonds usually perform. But Bitcoin doesn't follow those old rules. It follows its own rhythm, shaped by macro forces, geopolitical tensions, technological adoption, halving cycles, ETF flows, and global psychology. That's why sometimes Bitcoin rises when everything else falls, and sometimes it falls while everything else rises. There's no traditional asset that reliably matches Bitcoin's behavior. Sometimes it moves like tech, sometimes like a high beta asset, and sometimes it behaves like its own completely separate creature. Right now, this dip we're seeing is the result of several major forces, and it feels heavy, especially for people just entering the crypto space. But here's what some people forget. A dip isn't automatically a disaster, it's just a moment. Whether it becomes a problem or an opportunity depends entirely on your goals. If you bought Bitcoin expecting it to shield you instantly from every economic shift, then yes, this hurts. But if you understand Bitcoin as a long-term global decentralized asset, still in its early stages, then this dip is simply part of the journey. Because despite the volatility and the fear, one truth remains: Bitcoin eventually goes up. Not because of hype, not because of marketing, but because of its nature. Those fundamentals don't disappear just because the price doesn't cooperate for a few months. So in moments like this, the goal isn't to predict the exact bottom, it's to stay calm, to make rational decisions. And if you believe in the long-term story, to buy the dip when it fits your plan and avoid panic selling at the worst possible time. This isn't financial advice, it is simply a perspective from someone who's watched Bitcoin through many cycles. The people who thrive in this space aren't the ones who predict the highs, but the ones who stay composed during the lows. Bitcoin rewards discipline. It teaches patience in a way the traditional system never did. Take a breath, remember why you're here, and recognize that Bitcoin's path has never been straight, but it has always moved forward. Stay calm, and as always, stay curious and stay hodling.